Once a municipal bond issuance has been priced and the deal is closed, the bond then resides in the secondary market, where it may be bought, sold, or held by an investor until it reaches maturity or is called away by the issuer. In this lesson, we'll explore some features of the municipal bond an investor should be aware of when making a purchase. These include accrued interest, the dated date, as well as yield-related pricing terms. We'll then walk you through finding and selecting a municipal bond using the IBKR Trader workstation. Ready to get started? Okay, let's begin. The buyer of a municipal bond is required to pay the market price for the issuance as well as the accrued interest on it. To find the amount of the accrued interest, we'll first need to know a few specific dates. These are 1. The most recent coupon date, 2. The bond settlement date, and 3. The maturity date. Now, it's important to keep in mind that municipal bonds settle on a T+2 basis, meaning they settle 2 days after their initial purchase. And for the purposes of counting daily interest, we consider every month, regardless of the month, as comprising 30 days, and every year, a fixed number of 360 days. Note also that interest payments on municipal bonds are made semi-annually, that is, every 6 months, with payments made on dates based on the maturity date. The number of accrued days of interest spans from the last coupon date up to, but not including, the settlement date. And now that we know this, we can calculate the amount of accrued interest a buyer owes a seller when purchasing a municipal bond in the secondary market. Here's an example. On Monday, October 4th, you buy $20,000 worth of a 3% municipal bond that matures on December 1st, 2019. Since interest payments are made semi-annually based on the maturity date, we can anticipate they will be made on June 1st and December 1st. Now, because you bought the bond on October 4th, the last coupon date prior to the purchase was June 1st. And here we've identified the starting point to the accrued interest calculation. To figure out the end point, just use the day prior to settlement. Remember, settlement occurs 2 business days after the trade date. This means the bond will settle on Wednesday, October 6th, 2 days after October 4th, when it was bought. The entire timeline then is from June 1st, the most recent coupon date prior to purchase, to October 5th, that is up to, but not including the settlement date. How many days are in this timeline? Well, recall that we consider every month as having 30 days regardless of the month. With that, we count 30 days for each of June, July, August, and September, plus those 5 days in October, for a total of 125 days of accrued interest. Great, we know the number of days, but we're not done yet. We now need to figure out how much we need to pay for the accrued interest. Taking a look at the formula, we see that the total amount you'll pay the seller when purchasing this bond will be $20,208.33. Pause the video here if you want and try it on your own. When referring to the dated date of a municipal bond, this simply means the date on which interest begins to accrue. If it's a new issuance, then there would be no prior coupon date to consider the dated date. Therefore, the dated date is the same as the issue date. Now let's turn to pricing. Because municipal bonds may have a call feature, a date that the bond may be called away from the buyer, in addition to a final maturity date, the Municipal Securities Rulemaking Board, or MSRB, requires the seller to disclose whichever price or yield is lower. In other words, what would be the worst case scenario for the buyer, or the yield to worst? Would it be the yield calculated to maturity, or the yield calculated to the call? The MSRB is a self-regulatory organization for firms that deal in municipal securities. It crafts the rules and regulations that relate to municipal underwritings, as well as houses official statements and other related muni issuance documents in its electronic municipal market access system, or EMMA. We'll take a closer look at EMMA when we dive more deeply into conducting research through the IBKR Trader workstation, which is the subject of our next lesson. We look forward to seeing you then.